Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today, we are diving into a report from SenesTech. Get ready, because this one involves some financial maneuvering that might leave you scratching your head or maybe even cheering them on. Let's jump right into it. This report is dated March 9, 2025. It's called a Form 8K, which is like a corporate breaking news report for significant events. Here's the heart of the story. SenesTech made a deal with some investors who already owned warrants. Think of warrants as options to buy company stock at a set price. These existing warrants allow the holders to buy shares of SenesTech stock for $4.35 each. But here's the twist. SenesTech wanted those investors to use those warrants now, so they offered them a sweet deal. If they exercised their old warrants, they could buy the stock at a discounted price of $2.90 per share. And that's not all. In exchange for exercising the warrants early, SenesTech would give them new warrants too, essentially offering them the chance to buy even more stock in the future at that same $2.90 price. To make all of this happen, SenesTech brought in a placement agent, H.C. Wainwright & Co. They're like the deal makers who get paid a fee for putting everything together. The payment agent will get paid 7.5% of the money collected. On top of that percentage, SenesTech will reimburse the placement agent with $25,000 for expenses and $10,000 for clearing costs. SenesTech is giving the placement agent even more. The agent will be able to buy some extra shares at a slightly higher price. There's a catch: it needs the shareholders to approve of issuing the shares. Once approved, the agent has 18 months to use them. The date to mark on your calendars is March 11, 2025, or around that date, which is when all these transactions are expected to finalize, assuming everything goes according to plan. Now, don't worry, the shares from the old warrants are already cleared for resale because of a previous registration from last year. But to make this whole warrant thing work, SenesTech needs to file another registration statement so the investors can resell these new shares they might get in the future. SenesTech is also promising not to mess around with certain types of deals for a year after the closing date. These deals could potentially make the stock price go all over the place. So let's talk about these new warrants. Each one lets you buy a share for $2.90. They're good for 18 months after the shareholders approve the share issuance. If the company does things like split the stock or offer more shares, these warrants will adjust accordingly, so the investors aren't unfairly hurt. Now here's a clever move. If the registration statement isn't in effect, the investors can do something called a cashless exercise. Basically, instead of paying cash to exercise the warrant, they get fewer shares, but they don't have to spend any money up front. Important to note, there isn't currently a market to trade these warrants, and the company doesn't plan on making one. This might make it hard to get rid of them. Until you use the warrants, you're not a real shareholder. You don't get to vote or anything. You only get the rights of a shareholder once you buy the shares themselves. If SenesTech gets bought out or merges with another company, the warrant holders are protected. They'll either get the same deal that other shareholders get, or SenesTech will buy back the warrants for their Black Skull's value, which is a fancy way of estimating their worth. The rules of these warrants can be changed, but only if both SenesTech and the warrant holders agree in writing. If you are interested, you can go to Exhibits 10.1, 4.1, and 4.2 to see the specifics of these agreements. SenesTech is using a special rule that lets them sell these warrants and shares without all the usual registration hassles. Of course, this doesn't mean they can sell these securities anywhere they want. They still have to follow state laws. SenesTech put out a press release about this whole deal. You can find a copy of the press release as Exhibit 99.1. Now, what's the big picture here? SenesTech is essentially offering a deal to get investors to exercise their warrants now, bringing in cash today in exchange for the possibility of more shares being issued in the future. It is a bit complex, but let's try to explain. SenesTech seems to be betting that their stock price will go up. If it does, these new warrants will be worth a lot to the investors, and the company will have given away a good deal. But if the stock price stays flat or goes down, SenesTech will have raised some cash without giving away too much. Let's remember what SenesTech actually does. They're in the business of pest control, specifically focused on rat control using a unique approach. This gives them a bit of an edge and creates an interesting background to their current moves. SenesTech has a unique rat control technology. However, the company hasn't consistently turned a profit, and that's always a concern. In this situation, SenesTech wants to raise cash now. They believe it's more valuable to have cash on hand today to invest in growing the business, even if it means potentially diluting existing shareholders a bit in the future. This decision suggests that SenesTech thinks that it can take that cash and generate a return that's higher than the cost of those warrants. If they are right, it'll be a good move. However, if they can't, it will be bad for the investors who held their shares. So, is SenesTech a good investment? That depends on whether you believe in their ability to execute their plan and grow their business. The risks are there as they are with any small, growing company, but the potential reward could also be significant if they are truly able to revolutionize rat control. Thanks for watching. If you found this corporate decoding helpful, be sure to like, comment, and subscribe for more deep dives into the world of business.